The wealthy didn't become rich by luck. They became rich through financial habits that were repeated consistently, quietly, yet powerfully. It wasn't the result of winning the lottery, stumbling into a once-in-a-lifetime investment deal, or launching a million-dollar startup. It was the outcome of smart financial decisions, made over and over again for years, sometimes even decades. In today's video, we're going to uncover 7 money habits that the wealthy quietly practice every single day, and how you can start adopting them right now. These habits don't require you to be a financial expert or earn a 6-figure income. They only require the right mindset, persistence, and a willingness to take action.
Habit 1. Always live below your means, the first foundation of building wealth. Among the most foundational habits for building wealth, particularly for those in midlife, is the simple discipline of living below your means. While many assume wealth is about high income, it is more often the result of financial discipline. Contrary to popular belief, most millionaires are not extravagant spenders, but diligent savers, consistently investing a significant portion of their income. The gap between what you earn and what you spend is where true financial freedom is born. This practice is not about a life of deprivation. It is a strategic choice that prioritizes long-term security over short-term gratification. By consciously managing spending, such as keeping a reliable car longer instead of buying a new one, you create the surplus necessary to build wealth and avoid the destructive cycle of consumer debt. This cycle traps millions in a paycheck-to-paycheck existence, regardless of how much their income grows. The benefits of this habit are transformative. It grants you control over your cash flow, reducing financial stress, and providing a crucial buffer against unexpected life events. This surplus becomes the capital you can direct toward long-term assets like stocks or real estate, while shielding you from high-interest debt that silently erodes financial progress. You are no longer reacting to financial emergencies, but are proactively building a stable future. This principle is universal and requires discipline, not a 6-figure income. Figures like personal finance expert Dave Ramsey have demonstrated that frugality and a commitment to investing are far more powerful than a high salary alone. They built their wealth not by flaunting it, but by quietly and consistently making smart choices. If you are in your 40s or 50s, this habit is the essential first step on the path to financial independence. It is the solid foundation upon which all other wealth-building strategies, like investing, managing debt, and planning for retirement, are built. Wealth is not determined by the size of your paycheck, but by the habits you cultivate. And living below your means is the cornerstone upon which all lasting financial security is built.
Habit 2. Automate long-term investing. Among the most powerful habits of the wealthy is the disciplined practice of automating long-term investments. This is not merely a digital convenience, but a cornerstone of sustainable wealth, especially for those in midlife aiming to build security without being swayed by market volatility or emotion. Automating investments means setting up a recurring automatic transfer from your bank account into an investment vehicle like a 401k, Roth IRA, or a low-cost ETF portfolio. This simple action creates a system that runs on autopilot, removing the biggest obstacle to long-term success: emotional decision-making. It effectively prevents the common cycle of buying high during market euphoria and panic selling low during downturns. This strategy is known as dollar-cost averaging, DCA, a method endorsed by financial legends like Warren Buffett. By investing a fixed amount regularly, you purchase more shares when prices are low and fewer when they are high, smoothing out market volatility and reducing the risk of poor timing. For busy middle-aged individuals, this system is a powerful tool for stress reduction and time management, allowing you to focus on your career and family while your wealth grows quietly in the background. Furthermore, automating contributions into tax-advantaged accounts like a 401k or Roth IRA adds another layer of efficiency. either by reducing your current tax burden or ensuring tax-free growth for the future. In an economic environment of rising costs and longer life expectancies, a steadily growing investment portfolio is no longer a luxury, but a necessity. The wealthy understand that true financial progress is not made by constantly watching charts or chasing headlines. They build robust, automated systems and let time and compound interest do the heavy lifting. This discipline is what allows them to achieve financial independence, not because they are smarter, but because they are more consistent. You can implement this strategy today. Start with a manageable amount, perhaps $100 a month, directed into a broad market index fund. The initial amount is less important than the act of starting and the commitment to consistency. Wealth is rarely built in giant leaps. It is accumulated through small, disciplined habits repeated over time. Automating your investments is one of the most effective habits for securing your financial future.
Habit 3. Always invest in financial knowledge. One of the most powerful habits of the wealthy is their relentless investment in financial knowledge. This is not an abstract ideal, but a practical and powerful strategy that serves as the cornerstone of their success. For those in midlife, where financial decisions carry significant weight for retirement, this habit becomes even more critical. It's the key to shifting from working for money to making money work for you. The wealthy prioritize continuous learning. They read books, listen to podcasts, and study topics ranging from investing and business to behavioral psychology. Warren Buffett, who famously dedicates most of his day to reading, exemplifies this commitment. His deep, holistic understanding of how the world works, not just how markets move, is what enables his legendary long-term decision-making. The great news is that you don't need to become a Wall Street expert to benefit. The goal is not to master complex analytics, but to build a strong foundational mindset. Accessible resources like The Millionaire Next Door or The Dave Ramsey Show provide practical wisdom for everyday life. This knowledge cultivates confidence, which is your greatest defense against costly mistakes. It empowers you to distinguish genuine opportunities from the get-rich-quick schemes that prey on the uninformed, and to understand the risks and rewards of your choices. Most importantly, financial education grants you a sense of control. It replaces fear and uncertainty with clarity and purpose, which is vital when you have less time to recover from errors. You learn to think beyond the immediate and focus on decisions that build sustainable wealth over time. Financial wisdom is not an innate gift. It is earned through a commitment to learning. If you want to take control of your financial future, start by dedicating just 30 minutes each week to your financial education. Read a chapter, listen to a podcast, or watch an educational video. These small, consistent actions compound over time, reshaping how you think and act with money. The wealthy never stop learning, investing not just in their bank accounts, but in their own understanding.
Habit 4. Track and optimize your spending regularly. One of the most essential yet overlooked financial habits, particularly for those in their 40s and 50s, is consistently tracking and optimizing spending. This is not about obsessive penny pinching, but about gaining deliberate control over your cash flow to ensure every dollar serves a purpose. Wealthy individuals actively manage their finances, using tools to monitor spending, identify trends, and eliminate waste. The most immediate benefit is uncovering financial leaks, small recurring expenses that drain your resources over time. Unused subscriptions, forgotten auto renewals, and other invisible charges can quietly siphon hundreds, even thousands of dollars from a household annually. By identifying and cutting these costs, you can instantly free up significant cash flow without needing to earn more money. This is especially vital in midlife, when income may have plateaued, but financial responsibilities like retirement and healthcare continue to grow. Beyond just saving money, tracking your spending fosters intentionality. It forces you to ask whether your purchases align with your true values and long-term goals, or are simply driven by habit and social pressure. Modern apps like Mint or YNAB automate this process, categorizing expenses and providing clear insights with minimal effort. This data empowers you to make smarter choices, transforming your financial management from a reactive chore into a proactive strategy. Ultimately, the difference between financial stability and insecurity often lies not in the amount earned, but in how it is managed. Two people with the same salary can have vastly different financial outcomes based on this single habit. One directs their money with purpose, while the other wonders where it all went. Optimizing your spending is not about a life of restriction. It is about living with intention. It is a quiet, disciplined practice that ensures your financial resources are working for you, building a clear path towards security and prosperity. This strategic approach is a hallmark of how sustainable wealth is truly built, not through dramatic windfalls, but through consistent, intelligent management of what you already have.
Habit 5. Prioritize building assets over buying material things. In a society where image and consumption are often seen as markers of success, truly wealthy individuals take a very different path. They prioritize building assets over chasing material possessions. This isn't about being frugal or depriving yourself. It's a smart, intentional financial strategy, especially critical for those in midlife, when both time and resources must be used wisely to prepare for the future. Instead of pouring money into new cars, luxury watches, or designer handbags, items that can lose 30 to 50% of their value in just a few years, wealthy people invest in assets that generate income and appreciate over time. Think stocks, rental properties, or index funds like ETFs. They understand that lasting wealth doesn't come from flashy appearances, but from assets quietly working behind the scenes, earning money even while they sleep. The benefits of focusing on income-generating assets are clear. Smart investments not only grow in value, but also create passive income, unlike consumer goods that quickly become outdated or depreciate. For example, instead of spending $40,000 on a brand new SUV, someone might use that same money as a down payment on a duplex, living in one unit while renting out the other. The monthly rent could help pay off the mortgage and generate stable cash flow, all while the property itself appreciates in value over time. In the long run, this strategy builds a solid financial foundation. It protects you from unexpected economic downturns and empowers you to pursue bigger life goals, like early retirement, helping your kids through college, or simply having the freedom to enjoy life without constant financial worry. Wealthy individuals understand that financial peace of mind doesn't come from the latest gadgets or trends. It comes from knowing your assets are growing steadily, quietly, in the background. Of course, not everyone can invest in real estate right away, but building assets isn't limited to buying property. You can start small by investing regularly in ETFs using a dollar-cost averaging strategy, contributing to a Roth IRA or 401k, or putting money into REITs, real estate investment trusts. These are all proven, accessible options for everyday Americans, especially those in their 40s and 50s looking to build long-term wealth. Many people feel pressured to look rich just to gain social acceptance, and that's one of the biggest financial traps of all. Millions of Americans fall into a cycle of spending just to keep up with neighbors, coworkers, or what they see on social media. Meanwhile, truly wealthy individuals live modestly, invest a large portion of their income, and let their assets grow quietly in the background. Exactly the kind of behavior described in the classic book, The Millionaire Next Door. The good news? You don't have to be a millionaire to live by this philosophy. By simply shifting your mindset around money and consumption, you'll start to see opportunities to invest and save everywhere, from postponing an unnecessary purchase to redirecting that money into a long-term investment account. Over time, those small decisions compound into real wealth, not just numbers on a statement, but a life of freedom, less stress, and greater security.
Wealthy people aren't trying to look rich. They're focused on becoming rich through real, lasting assets. And you can do the same. By choosing to invest in income-generating assets rather than spending on fleeting material things. Because at the end of the day, it's your assets, not your possessions, that will protect you, support you, and help you live your fullest life.
Habit 6. Use debt strategically. One of the key differences between the wealthy and the middle class isn't whether they use debt, but how they use it. While many people fall into the cycle of consumer debt, credit cards, car loans, or high-interest borrowing for short-term wants, the wealthy take a very different approach. They use debt strategically to build wealth. The rich avoid bad debt, the kind used to buy things that quickly lose value, like luxury vacations, the latest gadgets, or upgrading to a new car just because it's time. Instead, they borrow only when that debt can generate cash flow or increase in value over time. A classic example is using leverage to invest in rental properties, where the rental income covers most, if not all, of the loan payments, while the property continues to appreciate in value. The advantage of using debt strategically is that it allows you to scale your financial growth faster than relying on cash alone. For example, instead of saving up the full $300,000 to buy a property outright, you might only need 20% as a down payment. The rest is financed by the bank. If the property appreciates just 5 to 7% per year, your return on your portion, your equity, can be significantly higher than if you had paid in full. More importantly, when used correctly, debt stops being a financial burden and becomes a powerful wealth-building tool. You're no longer losing sleep over next month's credit card bill. Instead, you're building a long-term plan based on consistent cash flow from investments. However, the wealthy don't take on debt emotionally or impulsively. They run the numbers. They evaluate interest rates, expected returns, potential cash flow risks, and worst-case scenarios. They always ask themselves, will this loan help me build long-term value? If the answer is no, they walk away. This is a critical mindset shift for anyone in midlife, a stage where financial stability matters more than ever. Taking on debt for short-term consumption can wreak havoc on your cash flow, especially as interest rates rise or as you near retirement and your income becomes less predictable. In contrast, using debt for smart investments can create a stream of passive income, helping you cover medical expenses, living costs, or simply enjoy a more comfortable life after 60. Here's a practical example. Many investors buy a duplex, live in one unit, and rent out the other. The rental income often covers most, or if not all, of the mortgage. Over time, the property appreciates, the mortgage gets paid down, and the investor ends up with a valuable asset, often with little out-of-pocket cost at the start. Strategic debt management isn't about avoiding all loans. It's about understanding the purpose behind each one. When you shift from borrowing to consume to borrowing to invest, you're also shifting your mindset from working for money to having money work for you. In midlife, when time becomes your most precious resource, learning to use financial leverage safely and deliberately is a critical skill for accelerating wealth. It's not just about getting closer to financial freedom. It's about entering retirement with peace of mind, not weighed down by unnecessary consumer debt. The wealthy don't fear debt. They master it. And so can you, once you change the way you look at debt and start using it as a tool to build a solid financial future.
Habit 7. Think long-term and commit to steady growth. One of the most powerful habits separating the wealthy from the rest is a steadfast commitment to long-term thinking. While many are lured by the promise of shortcuts and get-rich-quick schemes, sustainable wealth is almost always the product of time, discipline, and consistency. This is not about a single brilliant move, but a marathon of smart, steady decisions. Wealthy individuals build financial plans that span decades, not just months or years. This long-term vision provides profound emotional resilience. When markets inevitably dip, short-term thinkers panic and sell at a loss. In contrast, long-term investors remain calm, understanding that volatility is part of the journey. They see downturns not as a crisis, but as a potential opportunity to acquire quality assets at a discount. The historical performance of the S&P 500, which has delivered strong average returns over decades despite weathering severe crises like the 2008 crash and the COVID-19 pandemic, is a testament to this principle. Patience rewards those who stay the course. For individuals in midlife, adopting this mindset is more critical than ever. While you may have less time than you did in your 20s, you still have a significant runway to build meaningful wealth if you commit to a disciplined strategy now. The engine of this growth is not complex financial wizardry, but small, consistent actions. Automating monthly investments, using dollar-cost averaging to buy into low-cost ETFs, and conducting annual reviews of your financial plan. This long-term perspective also acts as a powerful shield against impulsive behaviors like emotional spending and chasing hot trends. It fosters the understanding that true wealth is built not overnight, but through thousands of deliberate, often boring choices. You do not need to be a financial genius or have a large fortune to begin. All that is required is a clear plan, unwavering patience, and consistent action. By saving steadily and staying grounded during periods of market noise, you are walking the same path that has led countless others to financial freedom. The wealthy think in decades, not days. It is this vision that builds not just riches, but lasting independence. You can begin that journey today by shifting your focus from short-term gains to long-term growth. Your 40s and 50s are your golden window to shape your future financial freedom. If this video resonated, like, share, and subscribe for more. Your story can inspire others, so comment below. Which of the 7 habits have you adopted? Next, don't miss our video on this channel. Start building your resilient future today.